Welcome to Business Talk here on businesstech.co.za, South Africa's number one business news website. So thank you for watching and for tuning in and scrolling and making us South Africa's most loved website. Now, one thing South Africans might not love all that much is paying tax. The budget is around the corner, and with it, tax season looms large. And the one question I get asked often is, does the tax man need to know about my side hustle? Now, given how many people are now having to work more than one job to make ends meet, I suppose it's not surprising. But I'm sure the short answer is, of course, he's the tax man. You've got to pay. Bazil Marema is my next guest, Senior Compliance Specialist at SAIT. Bazil, welcome to the show. What are the tax consequences of having a side hustle?
Thank you, Michael, for having me. It's a short answer, but let's try to be comprehensive about it. The consequence is that, first of all, you need to declare your income. And depending on whether you're in a profit-making position or a loss-making position, you will need to pay tax. But let's take it to the normal person in the street who works a 9 to 5 at their employer. And on the weekend, let's just say they're selling T-shirts, either at a physical store or on an e-commerce site. So studies show that 1 in 3 South Africans have a side hustle. And amongst those who have a side hustle, they earn less than 500,000 a year. So that is the threshold for submitting a tax return in South Africa. So if you're earning less than that, you're not legally required to submit a tax return, provided you don't have any side hustle income. So once you have side hustle income, it means that 1, now your tax obligation starts to kick in. You need to start submitting your tax return. And again, now your compliance level steps up. You now will be regarded as a provisional taxpayer, which means that you must submit provisional tax returns and make the subsequent provisional tax payments if your provisional returns require you to make a provisional tax payment. So the short side of it all, you have to declare your income.
You've got to declare. I mean, that is just the bottom line. And I know why, some South Africans might quibble, but ultimately, if we want to build the kind of prosperous South Africa that we all hope and dream of, then, we've got to pay our part as well. That, when it comes to how one registers as a provisional taxpayer, what does this mean? Should I register at CIPC as well? Do I have to register as like a sole proprietor? How does that work?
So the part of registering for CIPC, it's up to the individual, how they would like to handle the business. So some would want to run it through a business. Others will say, no, I'm just going to do it in my own name. And they are carrying on their side hustles in their own name. So prior, there was a time where SARS would say one has to register to be a provisional taxpayer. Now the ball is in the taxpayer side, the one who has a side hustle, to say individually you have to assess whether you are a provisional taxpayer. So a provisional taxpayer is someone who receives income other than remuneration from their employer. So obviously, if you have a side hustle, then you will be a provisional taxpayer, regardless of whether you are registered with the CIPC or not.
Yeah. Or if you're an independent contractor, so say someone who doesn't really have formal remuneration, but you deliver services to various clients. Now, when it comes to expenses, and I know everyone's now working at home or hybrid and maybe wants to claim a bit of their office space at home, or maybe the telecom line or their cell phone, what expenses can I claim as deductions and what can't I claim?
So when you have a side hustle, you will get tax deductibles that are available to companies. So you could claim, for instance, if you have a tangible product that you're selling, you can deduct the cost of your product. You can deduct the marketing. You can deduct, if you have a helper or you've employed someone, you can claim that as a deduction. and depending on where you're running your business from. So most South Africans will run their side hustle from their garage. So if you run your side hustle from your garage, will be the same as having a home office, basically. So you will claim deductions that are available for those who are running, who are having a home office. So you will claim, for instance, if you're paying rent, the portion that relates to your office, you can claim that as an expense. Your lights, obviously proportionate to your home office, you can claim your rates, your levies, the likes. So as long as the expense helps you to run and maintain your business, you can claim that. So the list basically it can go long, but
But that's the rule. If I've needed this in order to earn that income, then I could probably use that as a deductible. Wi-Fi, for example, and if I didn't have Wi-Fi, I wouldn't be able to email customers or sell online, that kind of thing.
it's a slippery slope that it gets a bit tricky. So for instance, let's say you have uncapped Wi-Fi. So you had uncapped Wi-Fi for 5 years. You didn't have a side house. You didn't have a work from home office. Now that you have your work from home office, or you have, you use it now to email clients, to interact on the internet and the like. It's hard for you to justify that a portion of my fiber goes to running my business, even though we can count the megabytes, but it might be a drop in the ocean compared to what you are using it for. Let's say you're streaming, because everyone is streaming now, or that expense was already there and now you're just using it partly for your own business. So you also need to look at your expenses, and from a resident point of view, to say, obviously the rent is different, but there are those little expenses that it's hard to attribute to your home office, like your Wi-Fi.
Sorry for you if you were hoping to deduct watching Business Talk on Business Tech, because you learn how to conduct business. I think it does get a bit tricky. That on the other side of the coin, though, what are the penalties if you don't declare and SARS finds out that you haven't been declaring this income as you should have been?
So the penalties is that, first of all, you will have underdeclared your income. Let's say you are in a profit position, so you've underdeclared your income. So SARS might charge you an under declaration penalty. So this is when you said your income is X, but it's actually Y. So when you say your income is lower than what it actually is, and SARS will also charge tax on that, which will result also in interest. So, and when SARS charge you interest, if they discover that you did not declare, let's say they discover today, but you didn't declare 5 years ago, interest will be backdated to the day that you were supposed to declare. So that can be a huge expense if you are a small business or you run a side hustle.
That is punitive. And obviously SARS does that because it wants to encourage compliance. Let's come back to how one actually goes about submitting that tax return. Do I have to think about starting to employ a bookkeeper here? Can I do it myself? Is it a bit too complex if you're not a full-time business person or accountant? How do I go about it?
Our tax system, although it's complex, but for someone who's running a side hustle, like in a small scale, it's possible that they can submit their own tax return on their behalf, because there are resources. SARS does host webinars for small MMEs. Your channel also has articles on what you can claim, what you cannot claim, also has tips on that. So you can do it yourself. Obviously, you will submit your return on e-filing. But if your business is a bit more complex, or if having gone to webinars, having read everything, you're still not sure, it's best to get a tax practitioner or a bookkeeper to help you with a tax return, because if you make a mistake, it'll cost you more to actually try to rectify it than paying a tax practitioner to get it right the first time.
Yeah, very good point. That Any last compliance tips for someone who's got a side hustle? I mean, the benefits, obviously, of having a side hustle are obvious. I think, people are just looking to supplement their income. The cost of living, inflation, and wages, if you're earning a salary, just haven't kept up. So I think more and more people are looking at getting into a side hustle. And sometimes that side hustle can become your main thing and help you pivot into entrepreneurship. What would your final compliance tips be for someone who's got a side hustle?
Someone who has a side hustle, I would say, first of all, declare your income. So regardless of whether you are making a profit or a loss, you should always declare your income. So what most people do is that they're like, oh, I made nothing last year. Because even if SARS comes to me, I don't have any income. They will not charge me any tax or any interest on that. But what you're doing a disservice to yourself, because what the Act allows is that if you run your side hustle and you don't make a profit, you make a loss, you can use that loss to offset your remuneration around it, provided that it's not ring fenced. So you should always declare your side hustle, whether you're in a profit position or in a loss position. And another thing is, let's say in the current year, I make a loss. I don't declare that to SARS. Next year, I make a profit. I cannot now say to SARS, but last year, remember, I made 100 loss, but today I made 100 profit, so I should not pay anything. If you do not declare that, you will not be able to offset that loss that you had last year to the income. So the first one, I'll say, declare your income, whether you're making a profit or a loss. The second part, I will say, always keep detailed records. Because in terms of when SARS audits you, you need to be able to justify things like your expenses. You need to justify things like your income, because imagine you're getting monthly income, but there's a month where nothing happens. You should be able to say, this month I did not trade, I did not do such and such. So you should always detail the ins and outs of your side hustle. The third part, I would say, keep accurate records and receipts or proof of payments. So sometimes it's not possible for you to have receipts. Like, you can give someone cash on the street and then you like, let's say vegetables on the street, you can just do that and sell them somewhere else. But if possible, make use of your internet banking so that at least when SARS asks for proof of an expense, you can go to your bank statement and show that this payment relates to this expense. And another one, I would say, do not get greedy. It goes back to the internet Wi-Fi. So if an expense does not relate to your business or it's incidental to your business, do not try to chase that tax deduction, because it causes havoc at a later stage in terms of when SARS audits you and all those things you cannot justify why you're claiming an expense.
Yeah, fantastic. Thanks so much for your time. Bottom line is, if you've got a side hustle, pay your taxes, keep records of everything, and be thorough, and don't try and cut corners. That was Bazil Marema, Senior Compliance Specialist at SAIT. Don't forget to like and share this episode of Business Talk on businesstech.co.za.